Good evening, everybody. It's Scott Gillum with the Shadow Trader short video for today, Tuesday, the 5th of August. And my topic today is General Motors. And how do we play it? Well, GM won't report their car sales until the end of the month. And after the last ones, we've got a little bit of a move to the upside here from July into the 1st of August, but now we're stalling out. So what I'm looking for is this area above and this area below seem to be a consolidation area, so that we're going to just chop over the next couple of weeks. So how can we play that? Well, number one, we could sell credit above and we could sell credit below. Now, do I want to take the trend line that's going on right now from the low to the high and extend that out and say, okay, there's my break around that 50-51 level, and then take the tops and take that break from the upside and say, there's a breakout above 56. So now that gives me some good confidence that I can play credit below on a touch here of an uptrend line, and I can play credit above, which will bring us to, a 23.6 minor fib, but also tag this high that we had in the last couple of days, which is the same as what we had at the first of the year and back into December. So let's take a look at how we would set this up. All right, remember, sell credit above, sell credit below. Let's take a look. Let's go out to the 29th, which is, by the way, the week before they pay their dividend, and their dividend is pretty excessive. So I want to play this thing before that dividend. And we've got implied volatility that's not over the top, around 30. And when we take a look at where we sit for this week, 36, 32, which is a little bit down next week, 31 on the 22nd, and 30. So I've got declining implied volatility trend here as we go into the dividend, giving me some good comfort that this one standard deviation below and the one standard deviation above levels here on General Motors should be pretty well set up. So the trade sits as this: sell a 50 put, cap that off by 3 points, and buy the 47. As you can see, that'll give us about 37 cents of credit on a support below. Now going to the upside, selling credit to the upside, 56 right at one standard deviation, and then buying the 59 to cap that off. That gives us about 29 cents. So overall, the trade is going to bring in about $75 or 75 cents of credit. And on the curve, if we take a look at what the curve looks like, let's just expand this out. We don't run into trouble until we get down here around 49, or running into trouble when we get above 57 or 56 and a half. And the probability of success on this trade, get rid of that, is in the 65% level. That's pretty good for an iron condor. So we make money anywhere between that 50 level and the 56 with a little bit on the outside. Let's go back to the chart. 56, well, that's above the prior highs that we tagged. And 50, well, that's right down here at a 50% retracement. So there you have it. Sell the 50, 53, pardon me. Sell the credit to the upside, sell the credit to the downside. The makeup of that trade is going to be a 50-47 put and a 56-59 call. playing GM on an iron condor. Hi there, this is Scott Yellow from the Stock and Options Room of Live Trading Suite. If you enjoyed this video, please hit the like and subscribe buttons down below. And if you'd like to trade live with me in real time, click again that link in the description below. Good trading to you all, and I'll see you in the room.